Coming up on Business Incorporated today, South Africa's Finance Minister presents medium-term budget policy statement. European Investment Bank provides fresh support to secure drinking water supply in Tunisia. And Nigeria's manufacturing PMI grows to 49.4 in October. Hello and welcome to the program. I am Bisi Adebayo. Let's kick off the program right away with intraday numbers, which were mostly negative, except Nigeria's main index, which continued its bull run. The NSE was marginally higher by 0.02%. Elsewhere, the GSC shaved off 1.31% ahead of the Finance Minister's midterm budget policy statement, while the EGX 30 declined 0.55%. Kenya closed negative on Tuesday. Meanwhile, investor sentiments were negative in the Middle East, with the Qatari index shedding the most by 0.56%, while Saudi Arabia's index lost 0.31%. In the UAE, the Abu Dhabi index declined 0.33%, while the market in Dubai was lower by 0.15%. And European markets were lower this morning as the rapid spread of the coronavirus continues across the continent, while U.S. election uncertainty compounds a risk-off sentiment. But let's talk to Conrad Booson to find out how this is weighing on the market today. Good afternoon, Conrad. It's good to see you again. Now, the rising corona infections in Europe and deaths, all right, I understand that we'll be getting back to Conrad in just a moment. But for now, let's turn to Asia, where stocks were mixed on Wednesday as coronavirus infections continued to rise stateside while oil prices declined. Shares in mainland China were higher, with the Shanghai Composite up 0.46%, while the Shenzhen Component advanced 0.893%. Meanwhile, Hong Kong's Hang Seng Index dipped 0.3% as at its final hour of trading. In Japan, the Nikkei 225 shed 0.29%, while the Topix Index finished its trading day 0.31% lower. Shares in Australia were higher as the S&P ASX 200 added 0.11%. While we wait to connect to Conrad, let's turn to London or to the UK, where Juliana Olayinka will be giving us updates on the markets at intraday. Good afternoon, Juliana. Let's begin our conversation with Heathrow losing its crown as Europe's largest airport for the first time after being overtaken by Paris's Charles de Gaulle. How did this happen, Juliana?
Oh, well, it's just, it's COVID-19, isn't it? Blame COVID-19 on everything this year. That's what people are doing. But I've got to say, this is a massive blow to Heathrow and to Boris Johnson, because, of course, they've had that ranking for years and years and years, and they were just picked to the post by Paris's Charles de Gaulle airport by just a fraction of passengers. Heathrow this year, for the 9 months up until September, has seen 18.97 million passengers. Charles de Gaulle's seen 19.27 million. Frankfurt and Amsterdam are just very close behind, and it is because of COVID-19. Passenger numbers have fallen about 85% in Heathrow. They've lost £1.5 billion in the 9 months to September, and their chief executive, John Holland-Kaye, has been doing the rounds of British media this morning, not mincing his words, really unhappy with Boris Johnson, and that's because the competitors have got some sort of in-house, in-system COVID testing regime so that people, when they fly home, they either can cut down their quarantine from 14 days to 7 days, or they don't have to quarantine at all. So really, I think a lot of Brits are saying at the moment that if Grant Shapps, the Transport Secretary, as well as Boris Johnson, were listening to the airline bosses and had implemented these COVID testing in airport much sooner, then this wouldn't be the case. But alas, of course, the COVID-19 pandemic is hitting airports all across the world. And you can see with those figures there, it's only just a sharp difference, but it has made a massive increase. I've got to say, it's worth mentioning as well that next year, I think Heathrow did forecast that 2021 passenger numbers would be up to about 60 million. After they made the announcement this morning, they've actually dropped their forecast by 50% to about 30 million passengers. So we're we're no way going to see passenger numbers coming back to Heathrow for at least another 2 or 3 years.
Well, this is certainly not the best of times for the airport. But now let's talk about this new agreement between BT and Ericsson, where BT has signed a deal to use Ericsson's 5G radio antennas, base stations and other equipment to upgrade its EE mobile network. Now, what does this mean?
What it means is that Ericsson have won this big gig. It is a big gig. In July, there was a huge story, huge storm actually, here in Britain, when finally, after going back and forth and pressure from America, Britain did say that they were banning all components of Huawei from their infrastructure, not just 5G, but from all of their infrastructure. This is going to take about 10 years for them to rip the pieces out. Britain is trying to level up, trying to get some 5G components. And now BT have decided that Ericsson, the Swedish firm, is going to be the brand to do it. So they're going to start doing that. I believe they will have access to components of 50% of 5G networks. They'll also be able to rip out and overhaul some of our 2G and 4G networks. So it's seen as a win-win. Both sides are pretty happy with this. BT have the monopoly on a digital infrastructure here in the UK. They can't do it on their own. They can't use Huawei, and they've chosen the Swedish firm Ericsson.
All right, Juliana, just before you go, take us through the numbers coming from the equities and the currencies markets at intraday.
Numbers are not great. We've had some pretty abysmal data from the retail sector. I spoke to Chimeze this morning on Business Morning about the CBI's survey showing that retail numbers are dropping. Footfall is increasingly dropping here in the UK. We've also had some retail data from the British Retail Consortium showing that the number of people going into shops is also falling. This is all down to these new restrictions. We're under so many different restrictions here in Britain. Most people are confused at what you can do, what you can't do. The furlough scheme is coming to an end at the weekend, so a lot of people are keeping their money in their pocket because they don't want to be broke at Christmas, and so that's dragging on the FTSE at intraday. The FTSE All Share is down 1.57%, the FTSE 100 is down 1.83%, and the FTSE 250, the domestic market, is down 1.36%. In currencies, the British pound is also down on the US dollar by 0.53%, down on the euro by 0.10%, and down on the Japanese yen by 0.73% at intraday, Bissy.
Many thanks, Juliana. We'll see you again later. Return to the US, where stock futures fell this morning following a mixed session in which traders weighed a recent uptake in coronavirus infections. Dow Jones Industrial Average futures traded around 290 points lower, paring earlier losses. The S&P 500 futures and Nasdaq 100 futures also traded in negative territory. Now, daily U.S. coronavirus cases have risen by a record average of 69,967 over the past week. All right, now let's take Conrad Buston, who's ready for us, reporting live from the Frankfurt Stock Exchange to tell us how the markets are doing at intraday. It's finally good to connect with you, Conrad. So earlier when I was asking that the rising corona infections in Europe and deaths from the disease have made investors very nervous once again. In Germany, where you are, Chancellor Angela Merkel is discussing new restrictions with regional leaders. Are people where you are getting prepared for a new lockdown?
BC, at the moment, the scenario is not that we're going to see a lockdown like the one in the spring. Retail shops, for example, are expected to be allowed to remain open. But other businesses are expected to be forced to close again, at least temporarily. Restaurants, also gyms, for example, everything that's fun and where people come together often, which of course means that the risk of a corona infection is high there. The government is expected to be eager to communicate that the supply chains should be protected. People are supposed to continue to go to work. But on the financial markets, this optimism for supply chain is not being shared today. Look at the German share index DAX today. It plunged nearly 4% this morning, and this is more or less where the market is at right now.
Germany's largest bank, Deutsche Bank, came out with a surprisingly strong third quarter earnings report. How come? What's helping the bank through the months which are so dominated by the corona pandemic?
You know, BC, the business that has caused so much trouble in recent years for Deutsche Bank is actually the one that has helped the bank to come up with higher revenues and earnings during the last quarter, and that's investment banking. This is where the business comes from right now. Volatility on the markets has been high during the last few months. Prices have been shaky, and that has caused a lot of demand for services that involve trading or any other services in investment banking. Of course, we shouldn't forget to say that Deutsche Bank is still sitting on a large bad bank of bad assets. Dating back from the times of more reckless investment banking. It's unclear right now how problematic this bad bank might still become for the bank. The retail banking business here, cost cutting remains the main driver. Deutsche Bank continues to close many of its branches. It's also trying to sell the IT business right now. So I have to say, the huge transition and transformation process that Deutsche Bank is in is far from finished.
All right, now one last question, Conrad, and that's the fact that we've seen many more earnings reports coming out. What sticks out? Which ones are worth mentioning?
I chose a few companies to mention. BASF, the German chemicals company, for example. Caterpillar, the machinery maker from the US. That's two companies on the one hand. On the other hand, I think it's worth mentioning Microsoft, also Sony, also the supermarket chain Carrefour. Why this on the one hand, and on the other hand, why these companies? Well, they represent quite perfectly that some sectors have gotten through the last few months, which were so dominated by the corona pandemic, quite okay, and others not. BASF and Caterpillar are like bellwethers for the globalized economy. You know, when this economy is down, orders for them are going down, business is bad. On the other hand, Microsoft with its cloud business, Sony with its entertainment unit, also Carrefour, the company selling, the food and the toilet paper that people still need, even in a pandemic. They all managed to come out with at least solid, if not better than expected earnings. So not all is doom and gloom. We really have a divided corporate world right now.
All right, Conrad, thank you. Do enjoy the rest of your day. And oil prices are taking a serious nosedive today as a surge in U.S. crude stocks and growing coronavirus infections in the United States and Europe fan fears of a supply glut in oil and weaker fuel demand. Brent crude was down 2.6% at $40.13 a barrel in early trade, while U.S. crude tumbled more than 3% to $38.35 a barrel. Both contracts ended Tuesday's session up 2% and 2.3% respectively. But the markets came under pressure following data from the industry group, the American Petroleum Institute, which showed U.S. crude oil and gasoline stocks rose last week to about 495.2 million barrels against analyst expectations for a build of 1.2 million barrels. Meanwhile, gold prices were little changed today, staying above the $1,900 mark as uncertainties about U.S. elections and surging global COVID-19 cases countered pressure from a firmer dollar and fading hopes of an immediate U.S. stimulus package. Spot gold was steady at $1,906.15 an ounce, while U.S. gold futures were down 0.3% at $1,907.10. Analysts say the pandemic has prompted unprecedented money printing and low interest rates globally, putting gold on track for its best year in a decade, given its appeal as a hedge against inflation and currency debasement. But in other metals, though, silver fell 0.9% to $24.33 an ounce. Platinum was up 0.1% at $880, while palladium rose 0.8% to $2,314.81. When we return, we'll turn our attention to South Africa's midterm budget and other stories. You stay with us. Welcome back. Any moment from now, Nigeria's former finance minister, Dr. Ngozi Okonjo-Iweala, is expected to be formally announced as the new Director General of the World Trade Organization. Her emergence follows the polling of 104 votes from 164 member countries to defeat South Korea's Trade Minister Yoo Myung-hee at the final stage for the race. Dr. Okonjo-Iweala becomes the first African and a woman to head the global trade firm. Well, let's talk about South Africa now. That country's finance minister, Tito Mboweni, is presenting the country's medium-term budget policy statement to Parliament. Africa's second largest economy has been struggling with tax collection, some $18.78 billion below pre-COVID projections, and a fifth of every collected tax dollar going towards interest payments on rising government debt. Well, joining us now to drill down on the midterm budget projections is Makwe Masilela, the Chief Investment Officer at Makwe Fund Managers in South Africa. Good afternoon. Thank you for joining us on the program. Well, the Finance Minister is currently presenting the midterm budget. I know you're currently monitoring that, but then tell us, what's the government proposing? Mr. Makasela, I was asking that the finance minister is currently presenting the midterm budget, but so far, what have you heard that the government is proposing? All right, so we'll reconnect with Mr. Masilela in just a moment. In the meantime, Nigeria's Purchasing Managers Index for the manufacturing sector stood at 49.4 index points in October, indicating a reversal of 5 consecutive months of contraction, which started in May. Data released by the Central Bank of Nigeria shows that of 14 subsectors surveyed, 6 recorded expansion above 50% threshold. Subsectors that reported expansion were electrical equipment, transportation equipment, printing and related support activities, chemical and pharmaceutical products, textile apparel and footwear, as well as cement. PMI for the non-manufacturing sector, however, stood at 46.8 points in October, showing a contraction in non-manufacturing PMI for the 7th consecutive month. The European Investment Bank has signed 2 finance contracts totaling 38 million euros with Tunisia and the National Water Distribution Utility to secure the drinking water supply in Greater Tunis and the 3 governorates of Belarus, Manuba and Ariana. This European financing will make it possible to develop and upgrade the infrastructure needed to secure the entire drinking water supply system in Greater Tunis. The impact of such a project will be significant for the local production, approximately 2.8 million residents, ensuring the supply of water to the entire population until 2040. Tunisia is facing a steady increase in water needs due to the demographic and urban expansion of Greater Tunis and its tourism, industrial and commercial development, particularly with a new financial harbour. Well, let's get back to the conversation with Mr. Makwe Masilela from South Africa, talking about the finance minister's current budget, or midterm budget presentation. Mr. Masilela, I hope you can hear us now. So I was asking, what is the government proposing?
Good day. Yes, the government so far is continuing to propose the cutting when it comes to spending, but it's not as much as they indicated in June. But that cut in spending, I think, is going to cause troubles, especially with political parties and labor unions, because mainly they're targeting to freeze what we call the public wage bill. So that's not going to be nicely received by our unions. And also they've decided to make allocation when it comes to the bailing out or helping the South African Airways with their business rescue plan. they've allocated 10.5 billion, and I think people will start complaining because that money is coming from cutting from other programs, whether it's the grants or the provincial budget. So something has to give so that that money can be received by SAA.
Well, so far now, what are the key areas the budget is focusing on and what stands out for you?
What stands out mainly is that they're trying to stabilize debt to be almost 95% of our GDP in the next 5 years. As we are talking now, South Africa is borrowing almost 2.1 billion a day to service debt, and debt servicing costs make almost 4.8% of our GDP. We know that the public sector wage bill since 2008 has increased by almost 51%, and it makes almost 11% of our GDP. And going forward, they think that they will continue to borrow money from MF, World Bank, but in a responsible way, as they said before. And state-owned entities, whether we like it or not, they'll continue to get the necessary support from the government, that justifying it as within the necessary framework. So they will continue to be able to bail them out.
So how do you think this budget will help the South African economy, which is already in a recession?
It's difficult to pinpoint because we're struggling to find anything new. I mean, the budget deficit to GDP will still be 15.7%. Hence, we saw the rand weakening to almost just under 2%. It's very difficult to pick up any new things. And for the fact that even the address by the president, there was nothing much new. So one is not surprised not to expect much new coming from the budget.
We'd like to thank you, Chief Investment Officer at Makwe Fund Managers, Mr. Makwe Masilela. Thank you for speaking with us. And that's our show today. Thank you for watching. I am Bisi Adebayo.